Hello again, people. Right, it's late Friday afternoon, well, mid-Friday afternoon, 20 past 3, and I've just got back from doing my horses and various chores, and this morning was, or midday should I say, 1:30, we had NFP and a bit of other Canadian dollar news as well. So just playing around with the MO lines, as I've mentioned on Twitter, by Muhammad Ali on Twitter. Does all the work on the lines, which is really, really nice of him. Freely helping traders out there. One of the few on Twitter that does actually help traders with no strings attached, which is great to hear. And I just am addicted to trading levels. That's how the ex-professional traders that I've forced myself to dig out, and professional traders, the odd prop trader, seem to like to trade, and it suits what I do absolutely fantastically. So we're looking at the sp500, the US 500, purely because I've created this new template with a few of the indices on there that Muhammad Ali on Twitter calculates these levels for, and I just thought I would like to have a play at trading, seeing if I could adapt my method to suit these. Much the same as the Billy TT London breakout trade. I like to trade all of these things in my own way with 3 candle reversals and RSI. Now, before I forget, because I do keep forgetting stuff, I want to say how much I really sort of one of my first ports of call, it's almost like a reflex action now, is to check for this RSI break and close. So that's the bust down, then we get the pullback, and then we get the break and close. And when I see that, then what I want to do, because we're on the 30-minute time frame here, I just want to make sure all the other time frames tally. So you can clearly see here, you've got on this 30-minute time frame, you've got multiple 3 candle reversals. There's a little one there, that's the penultimate, that's the ultimate, and that looks to me like it broke the low. It doesn't matter whether it did or not, because that one did. And then we've got another one here with this big outside bar style candle, and they are counted as long as you've broken through some sort of penultimate. That red candle looks like the penultimate, but the more support it breaks through, the better, of course. Notice how this price has come back to test those levels almost to the pip as well. We get that happens because when support is broken, it gets tested as resistance, and on a higher time frame you can trade that punch up as long as you use the lower time frame 3 candle reversals and the RSI. So you can trade this stuff on any time frame you like. I know I say this, but I don't say it enough. This chart could be a 30-minute chart, an hourly chart, weekly chart, monthly chart. It wouldn't make any difference. The only difference with what happens is the time it takes for the price action to fulfill itself. So if this was a daily pulled back to the downside, then you've got to wait for that retest, as it were, the reversal pullback. You've got to wait 4 days before you can consider entering the trade, and then you'd have to drop down to the 4 hourly and watch the pullback, the hourly and watch the pullback, the 15-minute, 30-minute, and all that lot. So you can imagine it's just a question of time scales. So I like to get my trades over in minutes, so that's why I trade the 5-minute, 1-minute charts. So the other thing to note here, well, apart from the obvious, we've got the old die-hard, the uptrend, a series of higher lows and higher highs. Then you've got your validated downtrend, high, low, break of the low, lower high, and that was where this high became a valid resistance level to draw your downtrend. So that's imperative, and it will always generally happen as a result of the 3 candle reversal, but just get yourself in a habit of doing that. So then you've got the good old die hard, the manually drawn, very old-fashioned trend line crossover like that. People would probably say to me, well, why don't you just use an MA crossover? As I've said in previous videos, I think get into the habit of drawing them, and it forces you to do your proper analysis, in my opinion, and observe the candlestick's price action. So at this point here, I was ready to drop down the lower time frames and see exactly what was happening. You know, I've drawn a few levels on there, but you know, I don't have, well, I should do for you, so let's do that. Let's do an H1. So we've got an H1 3 candle reversal, could be that one, definitely that one, so that's all good. Then you've got another 3 candle reversal here, clearly on the lower time frames. That's what we were talking about. So you could draw the low on there anyway and be happy that you've got your levels drawn in, clear breaks and closes. Also notice, look, we've even got the RSI bust, break and close on that candle there. I did notice that before I considered entering. So you could go on forever with these. You know, you just start to, once you understand what you're looking for, that's the low that was broken by price here, which means we've got a valid trend line connection over here as well. So M30, back to M30, 1, 2, 3 lower high, VIX Barandio's jobby there, all adding to the strength of the conviction of the move. Now we're on the M15, and you can clearly see we've broken a ton of support here with this M15 candle. I should drag the trade on. Laughable really what I took from the trade, 7 pips. But I can only say, and I don't say this in the videos often enough, the amount of times when I was a novice that I assumed the price would go to a further level for whatever reason, and it went back on me after going into a nice healthy strong profit. I can't begin to tell you. So I've just got this ingrained on me to go to first support, and you know, I need to develop a stronger, I don't know, conviction really as to price movements. But whilst I'm taking 10 to 20 trades a day like this, I'm quite happy. The drawdown is minuscule because you're using the lower time frames to you know, make sure you have every duck in a row, and you know, that's screen time for you. That's all you can do. You've just got to continually look for these trades, and I mean, you know, use your weekends wisely. You know, go back test the stuff, go back over it. When I say back test, just go over charts and charts and charts and charts, put a few vertical lines on so you know where you are in relation to the time of day. This is the American session, this is the pre-Frankfurt, Frankfurt, London Open, and then 9 o'clock, you know, when things start to go a bit sideways, as you can see there. Big moves during the market opens, sideways motion, then a little bit of excitement again during the London session. Big moves again because of NFP, but that's that trade. As you can see, the half round numbers and round numbers always get respected. There's an S level down here as well, FX like the daily pivot S1. So that's it. You know, walk away from your charts, come back, scan through a few of them. The Mo lines are causing me to find more trades. I don't trade the indices as a rule, but it's you know, it's only because there's too many currency pairs to look at. But I will still be waiting for reversals back to the hourly 8 EMA, just for fun after I've walked the dog again. So thanks for watching, and I hope this has had some value to you. Don't forget, subscribe and like the videos. I keep forgetting to say that. And the other thing, disclaimer, never trade what I talk about, always trade your own analysis.